the All Funds Investment Podcast explores those making investments in the alternative asset landscape, as well as the vendors who service these funds. We provide resources for emerging managers and insights for those in the alternative fund space. This podcast is for informational purposes only and should not be relied upon for investment decisions.
Welcome to the All Fund Investment Podcast. My name is Mike Schroeder. Today we're here with Paul Sylvia, co-founder of 4Alts. 4Alts is a turnkey digital platform for emerging alternative funds. Paul, welcome and thanks for joining us.
Thanks for having me, Mike. Excited to be here.
Absolutely. Thank you. To get us started, you mind just telling us a little bit about your background and what led you to create 4Alts?
Yeah, the majority really of my career has been working with in the hedge fund space, alternative investments. I did have about a 5-year stopover as an institutional investment consultant for Aon. And then I pivoted in my time at Aon to myself and 2 other gentlemen created a hedge fund platform inside of Aon, which was a unique undertaking, like starting a new business inside of a massive business. And that was an interesting, 3 to 4 years. And it was during that time that I came across a lot of these kind of, I would say, smaller, more emerging managers that were all interested in joining the platform at Aon. The issue was with the cost structure we had built with our platform in terms of, having top tier providers for audit and administration. Really the barrier to entry was about, let's say $50 million for the typical hedge fund strategy. So, we were saying no to a lot of these managers, and, a lot of them had a lot of promise, had great track records, great pedigree. But we were forced to kind of turn them away because it didn't really make sense to start a hedge fund with, when your all-in expense ratio is going to be north of 2%. That's not really a great way to start a track record on a hedge fund. So I started talking to a couple of my colleagues, and one of the other things I noticed in that process was just how much we were spending on outside legal counsel. And I knew if I was going to do something on my own, I would need to get someone in-house who kind of had that securities law expertise. And our current CEO, John Klimek, was just that guy. I mean, he's got over 30 years as a securities attorney. He had spent most of his career at HFR Asset Management, which was the hedge fund platform where myself and John and our other colleague, our COO, Jerry Happ, all worked together. So it's kind of like 4Alts venture was kind of like getting the band back together, so to speak. And really the goal was to try and accommodate, some of those managers, smaller, more emerging managers looking to launch hedge funds, but they didn't have, they weren't coming out of a big shop with 200 million in seed capital lined up. A lot of times they had anywhere from, call it 5 to 25 million to launch a fund, but they really didn't know where to start. And really the economics just didn't work. So I think one term that gets sort of used and abused on LinkedIn a little bit is democratizing this or democratizing that.
Oh yeah, I hear a lot.
But I do think it does kind of apply here because really the goal for us was to break down those barriers to entry for these emerging hedge fund managers that didn't have kind of that access to capital, but create a structure, a solution that allowed them to be able to start with as little as $4 to $5 million, but not degrade their track record in the early years because they were having to amortize expenses for legal startup, or because they're paying a minimum fee to an admin, or because they have E&Y charging them $50,000-$60,000 a year for audit. So that's kind of how we built 4Alts. We went out and essentially found good service providers who were also like us, young and hungry and growing, that were willing to kind of give us a deal based on potential scale of a platform, and work with us in terms of growing the business. So that's how we met, because we hired Sedrania and now Formidium as our administrator, and they were good enough not to have a minimum sort of monthly charge, which allowed us to get a lot of managers off the ground without having to, like I said, significantly damage their track records in the early years.
Yeah.
So again,
And that makes a lot of sense, because that's definitely a lot of something a lot of the earlier funds are worried about, when they're paying an admin, whatever, $2,500 a month for something, smaller fund. I guess why did Aon not see that opportunity, in terms of maybe smaller managers, lower cost service providers?
One of the big issues there was really just more, that generally there's Aon has a buy list of managers, right? So that list is usually the largest of the large managers. So there was always a conflict between emerging managers, and they just would never kind of pass their manager due diligence process. So we had tried to do it just as sort of like, if they could pass the operational due diligence, then we could put them on the platform. But again, that it's just the nature of a big company. Sometimes good ideas or opportunities go they go by the wayside because it's just not enough attention to it or whatever. But it was a great experience. Yeah.
That's great. So you guys started this on your own. So tell us about, your full list of services and kind of a high level, what you guys do at 4Alts.
Yeah. So, I mean, we were truly a turnkey solution for, like I said, the manager that, has been trading, has a track record. Maybe he's in a prop firm, or maybe he was, number 2 or number 3 at a hedge fund himself, herself, and wants to now go out on their own. And again, we tend to find the most success with managers that really, they're great traders, they're great managers, but they're not experts when it comes to operations or legal. So again, that's where, in a way, we're kind of like a consultant, right? Come to us and we'll guide you through the entire process from, registration to legal structuring, all the way through to, basically working as your back and middle office after you launch. So on a day-to-day basis, moving cash around, proving wires, dealing with your investors if you want. So really, it's a full suite of services. But I think one key element that we offer that is a huge advantage up front is just that first legal structure, whether you want onshore, offshore, or both. Going to a platform like ours offers I think, significant cost savings from going straight to a law firm to do it on the outside. And I'll give you an example. I would say, like, a typical hedge fund setup at an outside law firm could be, call it 35 to 50 grand, or even more, depending on who you're going to. Whereas, you could get an onshore only vehicle with us for as little as 10,000 upfront. And then, if you wanted onshore and offshore, we could probably do it for 15, depending on, the strategy. But that's a large savings over really what, you get going to an outside law firm. So I think that is one element that's really been successful for us in terms of, bringing managers on the platform. Now, the challenge we've had is that a lot of times we find the manager, they've already, sunk the money building that legal structure. So, at that point, it becomes more about, what kind of distribution do we offer as a platform?
Yeah, that's awesome. So I guess for somebody looking to launch a fund, you guys will help with the legal setup, and then you guys will take care of everything operationally, work with the auditors, work with the administrators.
Yeah. So we will, we set up all the service providers really are managed by us. So we'll negotiate the contract with the service provider, the administrator, the audit, and then any regulatory filings or anything like that. And we handle the legal. We have, generally speaking, John, as a securities lawyer, our CEO, does 95% of the legal work in-house, which, is a savings we pass on to our managers and investors. But we do have outside counsel in the U.S. and in the Cayman Islands, since we're a Cayman master feeder structure. But yeah, we handle pretty much everything. We set up the brokerage trading accounts, and we, like I said, move cash as needed between brokerage accounts, bank accounts. We open the bank accounts, and we're listed as the manager of the fund itself, and then the trading manager is basically the sub advisor. So there is, in that structure, in that setup, there's a little more comfort from the investor that there's kind of this independent third party between the manager and the investor that's kind of controlling what the manager can and can't do. And again, the manager can't take money out of that ecosystem, without our approval and the administrator's approval. So it's a little safer construct in our mind.
Yeah, that makes a lot of sense. Yeah, kind of, second eyes in the cash, especially when it comes to like moving wires, things like that.
Yeah.
I think that's a great benefit for these funds. What type of clients does Four Alts work with? The type of asset class, size, team structure, kind of what does that look like? And in terms of domiciles, US, non-US, you mentioned Cayman.
Yeah. Typically we're working with a manager, like I said, either coming out of a prop situation or another hedge fund. Generally speaking, they have, smaller team, right? So it's typically just I would say 1 to 4 people at the management firm, the investment management firm. And that, again, that lends to why they use the platform or why they would come to us, because again, we're like an extension of their team. Like I said, we're handling a lot of the back and middle office, a lot of the day-to-day operations, because what we're trying to do is just, have the manager do what they do best, which is, trade the portfolio and manage the portfolio. But yeah, typically from a strategy standpoint, we tend to attract more quantitative strategies. I'm not sure, why that is, but definitely more quantitative in nature, more systematic. But also, I would say we attract a lot of European managers because, they want to gain access to the U.S. investor market. So, they may have a fund domiciled in Europe, and then they want a U.S. fund for exposure to U.S. investors. But yeah, all types of strategies. But generally speaking, usually it's more liquid, right? So more equity long short, equity market neutral, equity artificial intelligence, managed futures is big for us. Obviously, being in Chicago, that's kind of the home of managed futures.
Oh yeah.
But I think too, the fact that I should give a little bit more of the backstory here. A couple of years ago, after starting our Four Alts business, we did sell half our business to a prop trading firm in Chicago called ARB Trading Group, and that was a significant boost for us because not only did we get their financial backing, but a ton of support in terms of personnel and resources, and again, the growth of our platform is tied really to that transaction, and they've been a great partner. But again, I think it's an idea that funny enough, I am good friends with a prop trader in Chicago who's now CIO of a agricultural hedging business. But I was talking to him several years back, and I think it was his idea really that what I was trying to do from a platform business really synced up well with what a prop trading firm might be able to provide as a strategic partner. And so again, that's when I kind of went through my Rolodex of contacts and stumbled across the ARB group. So again, that was kind of an interesting development for us, but it's definitely played out. There's quite a few traders within kind of that ARB trading group ecosystem that have potential and capacity and a good track record to come out as hedge funds. So that was really, from their perspective, why they were interested in our business.
That was exactly what came to my mind, where there's probably a lot of traders, these prop shops, maybe ready to start their own fund. You guys are the perfect partner.
Yeah, exactly. Yeah. And again, I don't know. I mean, I know some prop firms have gone and, made their own sort of fund of funds or, created their own kind of internal platforms, but I don't know of too many platforms like ours that are, kind of married up with a prop firm. So I do think it's unique in in a couple different ways.
Yeah, that's great. And in terms of, you covered a couple things, like in terms of the cost of setups, definitely, very advantageous going with four alts as opposed to setting up your own fund. What are some of the major advantages and disadvantages of using a fund platform as opposed to, creating your own structure?
Yeah, I mean, I think I already covered kind of the cost side of that equation in terms of setting up the legal structure. But in terms of advantages of a platform, I think it's that smaller size, I think, that you can start with, right? So a manager that might want to go on their own, they might have to wait until they get, if they ever get, call it 25 to 50 million to launch a fund. Whereas if you're tapping into a platform, you're really leveraging as a manager the scale of that platform. So, and what I mean by that is that, we've got, let's say, a dozen managers already on our platform, already using those service providers that we use in terms of admin and audit and legal. So, we generally can get better rates, right, with service providers than if a manager, with 20 million, let's say, goes out and tries to negotiate now with Formidium or with Richie May. I can almost guarantee that those prices are going to be higher than what they would pay if they came to our platform. And again, that's a big part of our kind of selling pitch to these managers is that, look, let's say our fee is 25 basis points for the platform. We'll show them that we're saving them more money, both from kind of that upfront cost of legal, but also ongoing costs of administration, audit, and legal. Most of the time, we're probably going to save them money than if they did it on their own.
That makes a lot of sense. Definitely, huge advantages, cost saving, and just leverage of the community. In terms of, is there anything like naming the fund, or are some of the funds like worried about sharing their strategies, anything like that in terms of like disadvantages of a fund platform?
Yeah, I mean, a lot of the disadvantages, honestly, were things that we, when we were creating this business, things we tried to eliminate from, kind of the platform business. There's obviously been quite a few platforms even here in Chicago over the years, and some of them have not succeeded, let's say, and some of them are still around and doing well. But again, some of the negative connotations with platforms historically have been around, how they charge fees, right? So if, like in our business, we just charge one platform fee. We're not sharing any of the management and incentive fees of the manager, so there's no real conflict of interest with managers there. We're not, we're not doing any sort of incentive fee arbitrage where, it's the difference between, what you as the platform, one investor and that manager is paying versus, the aggregate of each individual investor. So
Yeah,
we
spread of the
try
service.
to eliminate a lot of the, negative connotations of platforms. And one of the biggest things, honestly, that still happens today is platforms will lure a manager in by promising the world in terms of distribution, which I think I was never comfortable doing that in this business because, unless I actually had a salesperson or someone who had a proven track record of raising capital for hedge funds, then I didn't want to make that promise to the manager. So we have avoided kind of making that promise. And again, that's probably why most of our managers are, happy with us, even after some of them have been with us for 2 years, because we didn't start the relationship off on a kind of a false premise of distribution. But it's interesting because now we do have a salesperson, and now we do feel like we can, offer that as an additional service to managers that are interested in it. But again, I do think, some of those practices in the past have, given people left a bad taste in people's mouth about platforms. But again, I think we've tried to be very transparent about what our fees are and how we charge them and all of that. Because I even joke to my business partners that our transparency about the fees, which we provide upfront before the manager even comes on board, probably has hurt our sales cycle, because we're literally laying out every fee that they might encounter running the fund. And so, but again, in the long run, that serves you well, because they're not surprised by paying more than they expected.
Yeah, that's great. What does the competitive landscape look like for other fund platforms? And you covered a lot of this already, but how does 4Alts really differentiate themselves?
Yeah, I mean, I think you've been around this space. It's very competitive, right? So a lot of times when we're trying to bring on a new manager, they're talking to one or the other, platforms that are out there. And again, I'm oftentimes dealing with, people promising the world in terms of distribution and whatnot. But again, we stick to what we say we're going to do. But I think in terms of differentiation, I think we've been pretty differentiated from the start. I think one is the strategic partnership with ARB Trading Group is a huge differentiator. We can offer a lot of different kind of services to managers, and especially managed futures CTA traders coming into our ecosystem can leverage some of the things that we offer in terms of deals, lower trading commissions with some of the FCMs and exchanges. We have an in-house risk management service provider that's owned by the ARB Group. And again, I think just our nature of manager that we work with differentiates us. We're trying to find managers that want to start their first hedge fund or maybe start a new hedge fund and incubate it or take it out to the market right away. So again, I think some of these platforms tend to be heavy on CTAs, or they tend to be heavy on middle or larger size managers. But I think you'll find the 4Alts platform is pretty unique in terms of just the emerging manager nature of it.
One of them you touched on there was the incubator. Could you tell us about like the incubator who wants to start more of an incubator fund?
Yeah. So again, some prop traders, they might have a prop trading record. And again, you can, in one case, we actually had a prop trader coming out of the ARB Trading Group with a 6-year track record, which we did get audited by our auditor, Richie May. But even then, some investors will want to see an audited track record from a fund structure, right? So in a way, we're kind of incubating that fund for a couple of years to get that fund track record up and running. So again, there's some very light marketing or kind of sales efforts to raise capital for that fund, but the general concept is to keep that manager trading the same way they did in the prop side, but within that fund structure, so they can get that 2 or 3 year track record that a lot of the investors might be looking for. And I think that's a case that can be repeated with a lot of traders that, even if they're not in prop, a lot of times we see managers that are coming from, they might be managing anywhere from 20 to 50 million in just managed accounts, whether it's on the futures side or the equity side. And eventually they find an investor who needs that fund structure. And that's when, it makes sense to come to someone like us. And, depending on what that investor wants, they may not want that to be a commingled fund. So they may want to incubate that fund or just keep it a one investor fund.
What type of funds are you seeing in the market? Are you seeing any trends in terms of the type of funds or assets they're trading?
Yeah, and I know kind of the crypto space is your baby. So
Definitely.
What was interesting is that I would say, gosh, 6 to 9 months ago, there was a lot of funds coming to market that wanted to trade sort of, however you want to say it, yield farming or DeFi, the opportunities to, generate significant yield, whether it was staking tokens or whatever. And, what happened was the market kind of really took away a lot of that opportunity, right? So, it was arbitraged away by, bigger shops or, prop trading groups, whoever it was. But that kind of easy yield, easy money trade kind of disappeared. So, and then obviously we still having this kind of crypto winter where a lot of, crypto has just taken a big hit. So I do think more kind of market neutral type strategies, crypto funds that have been able to weather the storm are very attractive. But still, I think investors are looking for, crypto managers that might be considered, as crazy as it sounds, value plays now, right? That, have taken a big drawdown, but they have a great management team and a great strategy. And, they're, the investor's pretty confident they can rebound. So again, I think that's kind of what I've seen on the crypto side. On the sort of the hedge fund side / CTA side, obviously, people want something to hedge against inflation. So a lot of attraction to CTAs for the commodity exposure or for, trend following that's able to catch, any equity correction that's more longer lasting. That seems to be more in demand right now.
Yeah, definitely. I could definitely see CTAs, kind of starting to have a run here. I know that they've kind of, died off to a degree over the last decade. Good time to be in the market right now.
Exactly. Yeah. I mean, what was interesting to me, just one anecdote from, I guess it was my time at Aon, but, CTAs started taking in more and more assets, like the larger ones, right? And what happened was they started, instead of just trading the equity futures markets, they just started trading individual equities, right? And it was interesting because one of the reasons you would buy a CTA was for diversification, right? Or call it your left tail hedge in your portfolio. And as they added more individual equity names, I think a lot of that aspect of a CTA kind of went away, right? Because they become more actually correlated to the equity markets.
Yeah.
So again, I thought that was one interesting phenomenon that happened in the CTA space that I was not a fan of. But it again, managers tend to I guess I wouldn't call it style drift, but in a way it kind of is style drift, right? Going into single name equities when you're a futures trader, a bit of style drift simply to be able to take in more capital, right? So that's always been a big thing I've looked at when I've evaluated hedge funds was, do they do what they say they're going to do, right? And, we kind of put in place investment guidelines when we bring managers onto our platform, just as a way to kind of set a ring fence around what they say they're going to do, what kind of leverage and exposure they're going to need, and then, you know, make sure that they're following through on that, right? And not kind of, you know, we don't want an equity long short manager trading, you know, credit default swaps or anything crazy.
Yeah. Oh yeah. Is it hard to get the type of liquidity that you need from the equity or from the futures market? Is that what's driving these managers to the equity market?
Yeah, I mean, I do think that's part of it, right? You know, as they get bigger and bigger, they don't want to move the market, so they have to, you know, find different ways to get access to equities. But also, I do think there's some element of, you know, just the nature of the markets we've had, right? It became tough for CTAs to generate alpha when there really were no trends, or when, you know, we're just in an upward trending equity market the entire time, right? So it gave them a way to increase their correlation to equities, you know, based on just the market environment that we were in. So again, these are all people that are smarter than me, but you know, they've figured out ways to kind of stay relevant and put up some decent returns in a rough market for, you know, the typical trend following CTA.
What traits have you found in managers who have seen the most success? You know, in terms of, you know, is it somebody like a risk taker or somebody that has a particular niche, or what have you seen?
You know, I think one of the biggest traits is just discipline. You know, there's almost all of these managers are very intelligent. You know, a lot of times they're intelligent, you know, from a macro standpoint, or from you know, a qualitative standpoint, or they're a genius, you know, programmer who's built the best algorithm. But you know, the managers that tend to succeed are the ones that are, you know, dedicated and stick to really what their, you know, discipline is, right? So as I mentioned before, you know, if they found a strategy that works, or several strategies that works, the key is to stick with it, right? Not to deviate from that strategy just because you're in a period of that's not favorable for the strategy, right? So again, almost all due diligence process now, you know, the due diligence person will ask that question, right? What's a favorable market for your strategy? What's the unfavorable market for your strategy? So again, it's the ability to stick to what has worked for you before, but also you have to be able to kind of evolve with the markets, and enhance and improve, you know, kind of what you've built, either from a quantitative or a qualitative standpoint. But what's interesting is just the real successful hedge fund managers tend to be completely like obsessed, or just almost, you know, to an unhealthy standpoint,
Yeah.
just like so into what they're doing. You know, it doesn't feel like a job for them, right? It's more like, you know, an obsession, right? And you know, they're going to succeed at all costs, and you know, hopefully they're doing it the right way. But you know, it's important, right? Because you don't want your hedge fund manager to be a, you know, 9 to 5 kind of person, right? You want
Oh yeah.
one that's constantly thinking about ways to make money, or opportunities in the market to exploit.
Absolutely. Anything new you guys are working on you think is interesting right now?
Yeah, we are. You know, we're in the fourth quarter. We're planning to launch a sort of a crypto feeder fund platform. So I don't think we'll be, you know, the first to do it, but you know, I think the idea is to try and curate a platform of, let's say, initially 10 strategies in the crypto hedge fund space, and make those funds available to investors that might not have access to those types of managers, or might never know those managers even existed. And so we're actually you know, partnered with Formidium, formerly Sodrania, on that venture. Formidium has an unbelievable, technology suite of tools that, we can put into play for this type of, feeder fund platform, including, a way to a portfolio builder. So an investor can come in and put 3, 5, 6 funds together and see how they would look as a portfolio, as well as kind of an online due diligence questionnaire for each manager that the investors can review, and all of the managers, marketing materials and legal documents, all in one spot. And in addition to that, completely digital online subscription through Formidion's online software system, which is one of the best I've seen. So the idea is, just like the name, Seamless Alternatives Platform, to make the experience seamless, but also really bring kind of this new, newer strategy like crypto to kind of the masses, right? So by doing a feeder fund, we can aggregate investors, make the manager's life easy, and then make it easy on the investor to get in and out of these crypto funds, which again, like I said, there's a surprisingly large universe of crypto funds, and we're doing our best job right now to try and limit that universe down to let's say 10 of the most attractive funds to offer initially, and hopefully grow that to 40, 50, maybe more over time.
That's great. You guys work with so many different funds in this space, so that's a really great way to kind of leverage what you already have and create something new.
Yeah, it's I mean, you're always a little nervous about starting something new, and it kind of reminds me of working at Aon, but also starting a new business inside of Aon. It's like starting a new business inside of my somewhat new business.
Yeah, absolutely. What advice would you give to somebody that's looking to start their own fund today?
My advice, I mean, first off, I mentioned this before, but from the legal side, explore your options before you go directly to an outside, law firm. I mean, I think a lot of people do start the fund process by going to an outside attorney, because you need a legal structure to get things going, because obviously you can't open your trading accounts, you can't open your bank accounts until you get all that settled. But again, I think there are other options, like platforms where you could save significant amount of capital, and if your plan is to amortize that back to the fund as an expense, the smaller that expense is, obviously the lower impact it's going to have on your initial returns. But also really think about, if you're an aspiring hedge fund manager, think about your team and your staff, and really there's a huge chicken and the egg problem, right? Do you want to build an institutional quality hedge fund from day one? Well, that's a different story than trying to kind of build it over time. If you use a platform like ours, you can build it over time. You could start with as little as one person, just the portfolio manager, and leverage the platform team to be your back and middle office, to be your operations, your legal. But if you've got, if you have big backing and can afford to do it all, and you're going to start with $100 million, then I mean, to be honest, you probably don't need a platform like ours. So again, it's those are things that an aspiring hedge fund manager should think about before they launch a fund, and really write it all down, plan it out, have a business plan. Probably the best advice you can give to anyone starting a business.
Absolutely. Awesome. Paul, thanks so much. Where can people go to find out more about 4Alts and connect with you?
Yeah, we do have 2 websites, because we do have our 4Alts platform is for typical hedge funds, but then we do have a crypto hedge fund platform that's completely separate. So 4alts.com for the hedge fund CTA side, and then arbfmdigital.com for the crypto side.
Sounds great. Paul, really appreciate your time. Thanks so much for joining us.